Hey guys, this is Gary Lai, the AREAA National Mortgage Chair. I'm excited to be here today to give you an introductory webinar on Commercial Lending 101. With me today, I have Ms. Stephanie Chung, the Vice President of BFC Funding, and I have Yoon Se Cho, Senior Vice President of Five Star Bank. Stephanie and Yoon, can you guys tell us a little bit more about yourselves?
Sure, I'll go first, if that's okay, you.
Go
I'm
for it.
Stephanie Chung with Business Finance Capital. We're a certified development company. That means we're certified by SBA to approve, underwrite, and close loans on their behalf to the SBA 504 program. So we're also known as a CDC. And there are about 260 CDCs in the country, 26 in California. We're one of the largest CDCs in the country. So we definitely look at a lot of small business loans. And a little bit about myself. I'm board of directors for CCIM, currently president-elect for CREW East Bay. So CREW stands for Commercial Real Estate for Women. It's an organization with about 14,000 members globally. And we definitely try to advance women in real estate. And I grew up in Los Angeles, California, went to UC San Diego, moved to the Bay Area about 12 years ago. I've been loving it up here, even though it's been raining like crazy. And I have two kids. On weekends, I like to sing at church, and every day I'm passionate about helping small businesses grow.
Thank you. Yoon?
Fantastic. All right. So Yoon Se Chow, I am a senior vice president over at Five Star Bank. We're a small community bank, about a little bit over 3 billion in assets. We were founded in 1999 by two entrepreneurs, commercial real estate developers. We've been growing pretty exponentially in the last few years, like 20+% per year. We're out of the Sacramento area. We actually we IPO'd like almost 2 years ago now, May 2021. And as far as like myself, I've been in the commercial lending space, man, 20 years now. I think I started in my mid-20s when I still had a full head of hair. So I spent 14 years with the big bank, one of the big threes, Wells Fargo. And then I went to a small regional, not so small, where it's just like 100 billion Bank of the West. And then now I've been here for about 2 years. What I like about Five Star Bank is we're nimble. We're able to figure out how to make deals, structure deals to make them work. And on the personal side, I have 3 kids. Oh, I totally forgot. Like this past Friday, I was just installed as a board of director for AREAA Greater Sacramento. So that's.
Wow. Well, congratulations to
Thank you.
both of you then. We have
Oh, I think we lost Gary.
President-elect, and then we have a board of directors for different organizations. Awesome. So just to quickly sort of tell you, hey guys.
Yeah, your connection faded out for a second. Are you good, Gary?
Yes, I don't know whether you guys can hear me. Can you guys hear
Yeah,
me
you're
now?
good now. It's better now.
All right, I apologize, everybody. So what we are going to learn today is we are going to learn basically the basics of commercial lending and how it differs from residential lending. It's going to be a very high level sort of overview. So we will have time for a question and answer portion towards the end. There is also a question and answer button down below. So type out any questions that you guys might have there. The first question I have for both Stephanie and Yoon is, what type of property is classified as commercial? Can you guys go into that a little bit for us?
You want me to take that one, Steph? Yeah, so I think it's pretty easy if you think about it. Like if the property houses a business, that's usually a commercial property. I think on the residential side, you have the multifamily, any 5 units or more. As far as breakdown, you have like office, and then you have industrial warehouses like flex spaces, retail, your shopping strips, hospitality, hotels, motels, and then you have like your special purpose. Think of like bowling alleys, restaurants, movie theaters, things like that. As far as special purpose, the reason why they're called special purpose is because it'll take a lot of funds to kind of repurpose it into a different type of property. So most property types are general purpose. It's just a few special purpose ones.
Yeah, and it's very random, but if the property has a swimming pool in it, it's considered special purpose.
No.
Yeah.
Okay. So something like a hotel or stuff like that, or a
Mhm.
spa.
That's special purpose. Yeah.
Or a
Okay.
gym with a swimming pool, that would be considered special purpose.
Right. And usually because it's special purpose, it kind of limits the buyers out there. So leverage on those are usually lower. You usually see about 50 to 65% leverage on those as far as like LTV wise.
Okay.
Mm.
Gotcha.
And then we also consider special purpose if it's like a medical building and there's surgery on site.
Okay. So lots of different variables, lots of different
Right.
things to consider whenever you're doing commercial. I
Mhm.
guess the first thing that a lot of people would want to know is, as far as documentation wise, how does it differ from a residential side? So for residential, for what I do, it's very simple, right? We're looking at 2 years tax returns, pay stubs, or business returns. What do you guys look at as far as qualifying for
So,
commercial loans?
so we look at 3 years personal tax returns, 3 years business tax returns. We look at business debt schedule, and then we also look at a personal financial statement. This is on the owner user side. Do you want to talk about what you look for in a multifamily transaction?
Yeah. So on the investor side, it's all the same stuff. But you add in, like, if you're buying an apartment building or maybe a multi-tenant shopping strip, we collect a rent roll, and basically the rent roll lists like who the tenants are, when the lease started, when it expires, are there any options, um, and generally we also collect like an environmental questionnaire to see what background it is on that property, like has there been a gas station there or things like that that can affect the environment.
Okay.
Yeah, and adding on to that, we will have to order a phase one environmental site assessment that looks at the current and historical usage of the property to make sure there's no contamination on site. So if there was a historical dry cleaners or a gas station that could have impacted the property, that's something SBA wants to know. That's something the lenders want to know as well. And we also obviously have to order an appraisal report.
Yeah, well, sounds like there's obviously a lot more paperwork when it comes to commercial than residential. So what about the timing? How long does that usually take? Because obviously on the residential side, that can vary, right? Residential side in California, you're looking at about a 23-day sort of escrow close. Here on the East Coast, it goes anywhere from 30 to 60 days. What about commercial? Like what are the timelines like on your end?
So you're looking at about a 45-day financial contingency period and 15 days after that to close. So about 60 days, depending on how motivated the borrower is. If they're not responding in time and we're constantly calling, emailing, texting every day and still not getting a response, we may ask for an extension. But if the appraisal and environmental reports are ordered right away, we can most likely meet those timelines. Am I
Yeah.
missing anything?
Yeah, I would agree about 60 days.
Yeah.
I mean, we can do it sooner, depending on how quickly all the parties are motivated to move and get us what we need.
Yeah. So as far as product wise, right? So are there different products when it comes to commercial? Because residential sides, it's pretty simplistic, right? Like on the residential mortgages, you have your fixed mortgages, you have your adjustable rate mortgages, and your interest only. So those are generally what we do. Is there anything specialized for commercial, or what are the different products that people should be aware of?
I could kind of start. So first, like if I was to take a look at a deal, we first figure out, is this going to be an investor deal or is this going to be an owner occupied deal? And then depending on what kind of deal it is, we could decide, hey, if it's an investor, it has to be a conventional loan. But if it's owner occupied, we have the conventional program. We also have the SBA program. So yes, so investor and owner occupied. And as far as like how do you decide if it's owner occupied, SBA has a kind of like a guidelines, and then on the conventional side, depending on the lender, what it'll tell you. And basically, like your business will occupy that space at least 51%.
And the good thing
Yeah.
about the SBA program is that the borrower only needs 10% down typically, unless it's a special use property, then it's 15% down. So you're getting basically 90% loan to value for a low long-term fixed rate if you're working with a CDC. On the bank side, it varies depending on which lender is providing this loan and how strong the borrowers are.
Right. And in general, it's probably 75% leverage that you can get on a conventional side. But there's a big but. It depends on what the financials on that property looks like. So, what we look for is a net operating income, and it's basically your rent income minus the expenses, and it'll spit out like what your annual NOI is. And then you use that to kind of debt service and determine how much you can lend on the property.
Mhm.
So although, so I guess your net operating, so that's all, then I would guess it's all projected then, because if you're buying a business or you're buying a building, there's no historical data, right? So everything that you're doing is projections. Am I understanding that?
No, no. So like what I'm talking about is like if you're buying an apartment building, you
Yeah.
collect the rent roll. The rent roll tells
Yeah.
you how much
Yeah, I mean
revenue
that,
you're
yeah.
getting, and then you get the operating statement that kind of breaks down what the expenses look like year over year, and
Right.
you use that.
And then
So
on
then
the
how would
small
you guys,
business owner user side, we definitely look at the net income, but if the business is relocating their property, then we look at their historical financials. We don't really need to use projections unless it's like depending on the business and how far it is away from the current location. And then if it's an expansion project, then we do want to look at projections as well, just to see have they looked at the property, the area, how their business will thrive in that area. So we definitely help out with projections on those type of deals.
Right, and if you have a startup business, there's not many startup businesses that can buy real estate right away, but there are some instances where you can do it. Maybe like a dentist or someone like a veterinarian. Maybe they're starting a second location, but you can use projections on that.
okay, okay. So what are some of the obstacles that you guys face in a commercial transaction that residential agents that are going into commercial, they should be aware of? Like, what should they be looking out for?
So I would say, because we are dealing with a business for the owner occupied side, not the multifamily side. And you can talk about that. Um, a lot of these small business owners, they don't know what a P&L is or a balance sheet. I mean, most do,
Mhm.
but some of them don't. They don't have their documents in order. Their statement of information's all wrong. It doesn't match their operating agreement, or their articles, or the other entity documents. And so we kind of hold their hand and help them through the process. I have templates for everything. And I literally just had a borrower. He's like, I didn't do my year-end financials for 2022. I'm like, well, we really need that. And he wrote it out with a pen on a piece of paper, took a picture of it, and sent it to me. I'm like, all right, well, at least I got something. So those are the challenges we face. But I think it's good for small business owners to go through that process because they really learn a lot, and it really does help their business and get their ducks in line.
Okay.
Right, a business owner should really know their numbers. It's kind of like our standpoint on it.
Mhm.
I think the hurdles is as far as like timing wise and what we can lend, I think that can get lost in the translation. Like I was kind of talking about like a multifamily, how we look at the NOI to tell you how much we can debt service, and I'll tell you how much we can lend on it. Although we can lend up to 75%, not every property. I haven't seen any properties that can debt service 75% in years. It's just because either they're selling for high and like the rents are below market. And now with the increasing interest rates, some borrowers get surprised that maybe they have to come in with 55%. I think some of the other hurdles you probably run into the same thing is like if a borrower's not transparent with us.
That's
Um,
true.
Yeah, so you want to give us as much as you can. That way, like as I'm reviewing it, if I see any weaknesses, I'll look for ways to try to mitigate it. But if you don't tell me and we find it later, we always find it. It makes it very tough to undo any type of issues that we face.
It's a character issue at that point.
All right.
Character. Got it. All right. What trends are you seeing right now currently in commercial real estate? Is there sort of one sort of collateral that more people are gravitating to? Like, are they going towards multifamilies, or are you seeing more restaurants opening or retail sort of shuttering? Like, what are you seeing trends of in commercial real estate?
So on my side, I do see a lot of industrial warehouse type of deals, like about like almost 50% of my deals, and then about 20% or so is medical, and then the remainder, like 34% retail office, 32% retail office. So, retail office, it's different, like either retail stores or restaurants, or just small businesses that need an office space and they have customers coming in.
Right. And on my side, yeah, definitely the industrial ever since the pandemic has kind of pushed it to the forefront, kind of been the jewel, like the shining everyone goes after. Retail surprisingly has done really well. There's a lot, I have a lot of borrowers kind of looking at retail. I have a few like self-storage actually. There's a lot of people kind of jumping into self-storage. Typically they do well during recessions, but because there's so many people doing it, the cap rates are now down. Like you're paying more for it than what you're getting out of it.
Okay. Anything else you guys want to add, or?
We
I
are
think office is
seeing
probably
like the
being hit.
rates. Oh, go on, you.
No, I think office is probably the one that's been hit the hardest, especially like in downtown areas. Those are type of properties that got hit the hardest. There's people that are breaking their leases, folks that aren't paying because there's not a lot of people coming back to the office.
Hmm. Yeah, I think the smaller office properties are doing okay, but the larger ones are definitely getting hit. I do want to talk about rate trends. I know that rates kind of spiked last year. It was, I remember at the beginning of the year, you and I were on a lender panel. We're like, oh, it's gonna be around 4% by December. And we were off, right? So,
Yeah.
obviously we don't have a crystal ball and we can't always track, we can't always guess what the rates are going to be, but we do look at historical rates and the trends to that. So, I would say in the last 5 months, it's kind of plateaued for the SBA side around low to mid 6%. So that's kind of what you're
Okay.
looking at for on our side. And I think because it's plateaued, the product is a little bit more appetizing for borrowers because you know, they're not worried as much as they were when it first spiked. So it's kind of getting normalized, like the higher interest rate, I would say.
Got it.
What about you on your side?
Yeah, very similar. Like, I feel like it could swing anywhere from like the sixes to the sevens. Um, yeah, so right around there, we're kind of in line, kind of depending on the property type and what you're trying to do with it.
And word on the street is that interest rates are going to drop towards the end of the year, and we'll see how that turns out.
Yeah, yeah, unless inflation keeps going, if inflation doesn't go down,
Yeah.
then
So you touched upon this before, because you said that you started out at one of the big three sort of banks at Wells Fargo. So can you
right.
tell us about sort of the difference in lenders? I guess like what type of commercial lenders are there, right? So mortgage side is very simplistic, right? You have your brokers, you have your bankers, and then you have your institutional lenders. What is the
Right.
structure like on the commercial side?
Yeah, so on the commercial side, you have your conventional lenders like the banks. And then you have your SBA lenders that the banks work in conjunction with. Not all banks will do investor stuff. Not, like most banks will do owner occupied, but a lot of banks, they're pretty much siloed. So like one division may do owner occupied stuff, but if you want an investor, you got to kind of bring in somewhere else. So depending on the lender you work with, it kind of varies. And then there's also like kind of like the other lenders that are out there, like life insurance companies. They do loans as well. They can do long-term fixes. They're low, but they're very picky about what they want to do, and they're usually larger. I'm no expert. I just know that once in a while I'll run into them with my borrowers, like, oh yeah, I got this life insurance quote. There's also CMBS, which is a commercial mortgage-backed security, where investors can invest in them. And they tend to be larger type deals as well. And then there's agency loans like Fannie Freddie. They usually want more stabilized properties. Like some borrowers will come to us. Maybe they have a value add where they're wanting to buy a property. They want to add values for it, raise rents, and then maybe flip it into an agency loan.
Okay.
Yeah.
Anything to add, Stephanie?
Well, on the SBA side, there's an SBA 7A loan where you work directly with the bank. And those type of loans is typically business acquisitions, real estate, working capital, equipment, construction. And on the 504 side, it's always working with a CDC and a bank partner. And we only focus on commercial real estate, equipment, and construction.
Okay. So I have a question for you guys as far as for the residential agents out there that are jumping into commercial, what is one piece of advice that you can give them? One piece.
Maybe find someone that's doing it already and work a deal with them. Maybe even split it so you can learn how to do a deal, or find a good banker that has some time to walk you through it.
Yeah, I would say get your clients pre-qualified as soon as possible, because depending on how their financials look, you might be wasting your time looking for a $3 million property when they only qualify for $1 million. I mean, obviously we do work with projections, but we just want to understand the numbers a little bit better beforehand. And also, if there's like a property and the borrowers want to know what are my monthly payments going to look like, things like that. If you work with a lender, they'll be able to put together a loan proposal for you right away. So you're a little more prepared on how to deal with the transaction.
Okay. So what I want to jump into actually just some of the questions that they have in the chat box right now. Just because it seems you guys are touching a little bit on this, so maybe we can go into it. So Barton Louis asks, can you discuss some ways an investor can be more prepared to increase their chances for an SBA loan approval?
So investors can't tap into the SBA program. This is only for small businesses that are going to be operating out of the real estate that they're purchasing. So SBA is very strict on that.
Right. That's why I kind of brought up, like when someone comes to me and said, hey, I want to buy this property, then I had to figure out what the use for the property is. Is this going to be an investor? Like, are you just going to rent it out to someone? Then that doesn't qualify for SBA. But if it's going to be owner occupied, then you have the SBA open to you. You have the conventional loan open to you. I don't know. Yeah, so you have both routes you can take. I usually try to present it. I think the we kind of look for is like, do you have the down payment to go larger? If you do, then you can go conventional. If you only have 10%, then SBA is probably the only route you can take.
Yeah, and the program is designed so that people keep more money in their balance sheet. So even if you have the money and you want to tap into the SBA program, I think it's always great to just have a little bit more cash to run their business, right? And again, to repeat what you had mentioned earlier, in order for you to qualify, you have to occupy at least 51% of the property. So that means 49% you can rent it out to a tenant.
Okay. So we have another question in the chat from Benjamin Wong. He says, how do you guys find great lenders? Like, how do you find reputable lenders? How do you find who to
Well,
work with?
there's two here.
Obviously, right?
So you just need to contact us. We can connect you with, we have a big network, so we can
Right.
connect you with people. If you're in a different area from where we are, we can try to connect you.
Yeah, the thing is like when you're in as long as I have, like you have coworkers that maybe are at other places. And I'll look at deals where I'm like, man, this can get done there. I can't do it. And I have no problem just sending it to someone else.
Yeah, we just want to help our clients and we just want to get the deal done.
Yeah.
So I didn't
So I
mention
have-
I've been in commercial real estate for about 15 years as well, so I have a big network.
Good. Well, perfect. What is your most memorable transaction? It could be either a great transaction or it could be something that was a nightmare. If you guys want to share, obviously names are not, you don't have to name any names, but we want to hear some of the experiences.
So you want the good story first or the bad story first? I have two stories I want to share.
We'll hear the
So
good story because I
the
like
good,
to.
okay. So
Yeah, let's hear the
I
good
was
one
able
first.
to help this minority woman-owned business. So she liked to she was creating vegan fried chicken and she just needed a kitchen and she was outgrowing her space in Oakland. It was just so expensive and the place was tiny and she started getting contracts with Whole Foods and some other big, like I guess grocery chains. And so she's like, I need to find a bigger space. And so she decided to go to San Diego. And a lot of the banks that I was working with, they didn't like the fact that she was going from Oakland to San Diego because they felt like, oh, she's in a completely new territory. But, for her, she wasn't really, it wasn't a retail space, right? A lot of people, the orders were through online or, it was just more contract based. So I was really um, confident in her product and I ended up taking it to four different banks after three different declines and then finally got a bank to work with her and she was so happy once we closed. She called me crying, thanking me. And those are the type of deals where it's so moving and just I feel so passionate about helping these small business owners, especially because a lot of these small businesses, they're like babies to the owners, right?
Mhm.
A bad story is that, I don't like to not do deals, obviously, like, you want to get the deal closed, but I just want to make sure it's a good deal and then it's not going to ruin my reputation or anything like that. I was actually working on a deal with Yoon where we were trying to get the deal approved with SBA, and then SBA had a question about this one, I guess, PPP loan that was outstanding, and just kind of digging into it more. And around that time, found out that there was a really bad character issue for this client. For I would say like 3 months or so, she had forced me to call her doctor, but later to find out that she was actually practicing without and this was like a business separate from the current business she was owning. Um, finding out that she actually wasn't a licensed doctor,
Oh, wow.
and there were like articles on her, and so I found that out, and then I had to tell about it. But I think we were mentioning if she came clean early on, if she was remorseful, if she felt like, okay, I had a past but I grew from it. This is not who I am anymore. I learned my lesson. We would be happy to help her out. But, in this scenario, she kept hiding the facts. She kept having me call her doctor when she wasn't. So, in situations like that, we weren't able to move forward with that loan.
Wow. Okay. Ewan, can you top that?
No, we worked on that one together actually. We weren't going to approve it until that point. How is it going to look like me taking it to our committee and all these things are like there? It'll be like me trying to push a deal that doesn't make sense.
Yeah.
And I
Yeah,
have done a deal
Yeah.
where 20 years ago the borrower had a felony, but he was completely clean now, had a foundation to help anti-bullying, done so much great things for the community. And for people like that, I'm more than happy to help them as much as I can.
Yeah.
right.
Yeah.
And
Yeah,
it's
because
good to have an advocate for you, especially going into loan, like, underwriting or loan committee. I think like a story, Stephanie heard this story before, but he's on my mind because we just closed the deal for him on Friday. So this guy's a veterinarian. He actually, I worked with him way back. I worked for a company that was acquired by Wells Fargo, and all we did were doctor loans, like practice acquisitions, buying buildings to move the practices to. So this doctor was buying a practice, and at the time, he was just kind of newly licensed, and that becomes a risk because there's no background on if he can produce. Because if you're too fresh out of school, we don't know if you can produce because you haven't worked. So at the time, he was shot down by another bank. I took a look at it. Our underwriting team was kind of struggling with it. I had my credit manager jump on the phone with them, and we were able to push it through, knowing that his dad was a veterinarian and he worked with his dad like during that. So we got comfortable with it, and it was a small deal. It's like 300,000 or something like that. And this was back in 2010, maybe 2014. I forget. It's been so long. But then a few years later, like I left and I was no longer with that group. I was with a different division of Wells Fargo, and he was able to Google and find my number and said, "Hey, I I'm blowing away my numbers and I need a larger space." So we ended up it ended up being a big deal. Like he bought a building, he built a brand new practice, and it was a big success. We used the SBA program for him, the 10% down. And then haven't talked to him for a while. He calls me. I helped him when he was selling that practice, and he actually sold it for a ton of money to like a private equity. And then I joined Five Star maybe 2 years ago, and he came to me again and said, "Hey, this big bank said no to me because they don't like that I have a big mortgage." And he was like, "This other bank had said no to me because the revenues are declining in this practice." And because of my background with them, I knew that he can do it. So we went ahead and did that deal for him. He bought the building, he bought the practice. A few years, like half a year later, we did another deal for him. He bought another practice, and then this third practice just this Friday, and he's so happy. He's down in Southern California. I went down to meet with him. Yeah, he's very grateful. Worked out good.
That sounds like a great story.
Yeah, it's a
Yeah.
true
I mean, especially having
story
a
of
repeat
helping
customer.
small businesses grow.
Right.
No, that's good. So I guess I have a question. So are there any limitations then as far as where you guys can lend? Because on the residential side, if let's say if you're a mortgage broker, you can only lend in whatever state you're licensed in. Is that applicable to the commercial side, or you guys can just lend anywhere? Like how does that work as far as licensing or where you can lend?
For certified development companies, we're certified per area. So we're certified in California. We have a Nevada, Arizona CDC partner that we like to work with. But yes, we are restricted to where we're certified.
Okay.
Yeah, for me, anywhere in California is usually a go. If it's out of state, it's got to be a strong sponsor. I did close one in Wisconsin, so that was like way out there, but it was for two local guys. There were two doctors. They sold a almond orchard, and then they were 1031ing. They're trying to get a property out of state to kind of chase like the higher returns. We went ahead and did that for him, like a 10 unit like shopping strip.
Cool. Got it.
Yeah.
Okay. So there is a question that's in the chat box that I see that very interesting question. So trying to find an SBA lender that can do a liquor store purchase in the same area who owns two other liquor store. Lenders I spoke with have issues with 17-year leasehold versus ownership of the property. Is the leasehold a drop dead issue, practically speaking, with an SBA? I am told the liquor may also be an issue. Any insight? And the only reason that that sort of spoke out to me is just because on the banking side, there's certain sort of businesses that we sort of red flag, like a lot of cash heavy businesses, things like that. So what are your thoughts on that question?
Well, for us, we don't have restrictions on businesses that sell liquor. I would say cash heavy business. Well, yeah, if it's cash heavy, they're not reporting it, then the cash flow's not going to look strong, right?
Yeah, they
So
want that service, yeah.
exactly. So if it's a business that can debt service properly, we can work with that definitely. We can't do cannabis. So any businesses that aren't federally legal, we can't tap into the SB program.
Right. And I've done liquor stores before, not an SBA like a few years back, but I'm kind of taking on a new role within our bank, kind of doing more SBA. So this just started last week, so I'm not fully up to speed on all the SBA guidelines yet.
Got it. Okay. So there's one question in the question Q&A box from Justin, our commercial chair. Thoughts on high vacancy for multifamily properties?
We can lend on them. So there's a few ways. I mean, we can look at it, and if you can secure tenants before we can close, we can use that income. If you don't, then we would have to use what the existing income looks like, and maybe do what we call as an earnout, where you tell us what the market rents are, when you're going to get it filled. We'll say, okay, we approve you for this amount, but we will only release this at close. Once you get it stabilized and tenants in there, then we'll release the rest of the loan. So that's one way for us to do maybe like vacancies.
Okay.
It kind of sounds like a business plan.
Yeah. 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 And some investors will come to us and say they're going to do this and do that. And we're like, okay, then do it. And then we'll release the rest of the funds.
Okay. So this is actually going to be a combination of two of the questions that I didn't notice. As far as on the commercial side, on the commercial lending side, is there any limitations as far as on the vesting, whether it's vest in individual, LLC, S corps, or C corps? And also, can you also lend on nonprofits?
So on the SBA side, we can only lend for for-profit businesses, and you can hold title in multiple different ways. You can hold title through an LLC. You can hold title through a trust. You can hold title through personal names. You can hold title through the operating company. That's rare. I rarely see that, but those are different ways you can hold title.
Right. Same on the conventional side. Nonprofits not SBA eligible, but on the conventional side, we can lend to nonprofits. I did a refi for a local temple not too long ago, so we're able to do it here.
Got it. Okay. It seems like a lot of people sort of want your contact information. Obviously, I see Yoon Say Chow's. His emails is ysaychow@fivestarbank.com. You see his phone number right there, 510-368-2501. Stephanie, I don't see your email. Do you want to give everybody your email?
Yeah, I'll put it in the chat box.
Cool. And Mr. Martin Yao from Boston wants to know, do you do commercial loans on the East Coast?
For me, unless it's an SBA, like a 7A, probably not unless the borrower is here. And we're kind of following our borrower out to the East Coast.
Got it.
Well, US Bank is a great bank, and they do commercial loans in the East Coast all day long, right?
That, Martin, you and me will take that offline, Martin. So anyway, is there any other questions that we have from the attendees? Actually, let me see. So there's one that says, you mentioned that 41% of the space can be rented out. Can the 41% rental income be used for qualification?
So it's 49%, right? Because you just need to occupy 51% of the property. We do not include rental income into our cash flow analysis. Yeah.
Okay.
What about you, Yoon? Do you?
On the conventional side, we would use it. Yeah.
Okay.
But I
Alright,
do projections. So even if we don't use the rental income, we could use projections on what the business might gain in revenue in the next year or two. And then, we can work with that as well, and a business plan.
Perfect. There is one question about hotels. So do you guys lend on hotels, or can you guys recommend a lender that specializes in hotels?
Yeah, we can do SBA loans for hotels. Those are considered special use properties. I just did a refinance on a hotel. Um, I've done Holiday Inns, Best Westerns, and yeah, even though the purchase price is kind of large, you can tap into the 15% down payment program. And then let's say that you are currently a hotel operator and you want to purchase a hotel, but you don't want to have your current hotel guarantee the loan for the new purchase, you would need an additional 5% down. So that would be a 20% down scenario. But if you're open to having your hotel guarantee the loan, then you would only need 15% down.
Yeah. Okay.
Yeah, on my side, like hotels, motels, those are low appetite property types for us. I mean, we can do it, but it's got to be very strong.
Got it. Okay. I think we have most of the questions answered. There is one new question. Any creative way to obtain SBA loan for multifamily? Hard for owner to occupy 51% though. Just want to make sure I'm not missing something. Good to know SBA can be used. Okay. Sorry, that was more a comment, not a question. I apologize. If there's no other questions, then I do have one last announcement. May 17th to the 19th is our Diversity and Fair Housing Summit in Washington, D.C. The current price right now is at $199. It's going to go up on April 2nd to $249. So please register now before April 2nd, before the price goes up for our members. The website is area.org/diversity summit. And we just got a confirmed speaker for Samir Goel, the co-founder of Isuzu. Okay. And I think that's it for me. I do have one last question for Stephanie and Yoon. Who do you root for on Sundays? Who's your football team? Come on. I have to ask just because I'm friends with Justin.
Raiders. I grew up in Oakland. I got to go with the home. Well, they're not home team anymore, but I still follow the Raiders, even though it's a heartache every Sunday, but it's still my team.
All right. Thanks, you.
So I would say Niners, but a lot of my best friends are Seahawks fans too. So if they're not playing the Niners, I'll, cheer them on. But I just went to back in December, I went to a Seahawks and Niners game when we won, I think, because I was there. Just kidding.
That's probably why.
Awesome. All right. I think that is it for me, guys. I want to thank Yoon and Stephanie for being here and dropping your knowledge for us. I hope to see you guys at the next webinar. And if that's it, have a great day wherever you guys are. Thank you so much.
Thank you.
Thank you for having us.